Canada's inflation unexpectedly surged to 2.4% in March. This jump could affect your wallet and the economy right now. What's driving this sudden rise? In March 2026, Canada's inflation rate climbed to 2.4%, as reported by the Wall Street Journal. This marks a clear acceleration compared to earlier in the year, signaling faster price increases across key sectors. The inflation rate measures how much prices for goods and services rise over a year. A jump to 2.4% means Canadians are facing higher costs for everyday items, from groceries to gas. The main drivers behind the inflation acceleration are rising prices in energy, food, and housing. Energy costs, especially fuel prices, have seen upward pressure due to global market shifts. Food prices continue to climb due to supply chain disruptions and weather impacts on crops. Housing costs, including rent and utilities, also rose, pushing overall inflation higher. These combined factors are squeezing Canadian consumers more than expected this spring. With inflation at 2.4%, Canadians are feeling the pinch in their daily budgets. Higher prices mean your dollar doesn't stretch as far, especially for essentials like food, gas, and housing. This can reduce disposable income and impact saving plans. For those on fixed incomes or with tight budgets, the inflation rise poses real challenges. It also pressures businesses to adjust wages and prices, which can ripple through the economy. Looking ahead, experts caution that inflation might remain elevated if current trends persist. Energy markets remain volatile, and housing affordability issues are ongoing. Unless supply chain bottlenecks ease or monetary policy tightens further, Canada's inflation rate could hold above the Bank of Canada's 2% target. Policymakers are watching closely, balancing growth concerns with inflation control to avoid triggering a recession. In light of rising inflation, it's smart to review your personal finances. Budget for higher expenses in essentials like food and energy. Consider locking in fixed-rate loans or mortgages to avoid future cost increases. Review your investments to ensure they can withstand inflationary pressures. Staying informed about inflation trends helps you make better financial decisions in this uncertain environment. Canada's inflation jumped to 2.4% in March means higher prices are here now, affecting your daily expenses and financial plans. Staying aware and adjusting your budget can help you weather this inflation spike. For more updates on how economic changes impact you, subscribe to Daily Q&A and stay ahead of the curve.